What is good, guys? It's Ray J back with another video. And this one, I want to talk about Tesla stock and break down something very important about trading in general. I want to give you guys two important lessons that could really change your life, benefit the way that you trade, and help improve the way that you see the markets on a daily basis. But before I begin into all this information, before I get into any more details, let me just mention a couple of things. Firstly, I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull and deposits $500 into the account, you are guaranteed 20 free stocks. If you deposit $25,000 or more, you're guaranteed 75 free stocks. So, anyways, let's talk about Tesla. How is this thing looking? As you guys can see, we have a nice inverse head and shoulders like structure. But how would I actually look at this in terms of price action? What could we actually learn about trading when it comes to the way that I would play this? So, when it comes to the way that you play Tesla, right? When Tesla gets a breakout, or if any stock in general breaks out, you don't want to just start immediately trying to go long when it already made its move, right? I'm sure a lot of you guys know that. That's not what you're essentially looking for. The time in which someone should have gone long is when this thing was like starting to curl here, or even during this test, right? Once the breakout started, you could have gone long like around here. Even this breakout, I mean, technically could have tried a long here, but it wasn't as great. So there are a lot of other opportunities, and that's when you want to be very careful. But what about here? Could you go long here? That's going to depend on different factors if Tesla gets a bounce or not. But I want to talk about the importance of confluences when you're trying to look out for them when you're trading. So what a confluence essentially is when you have two or more different indicators, different signals that are telling you the same thing, and that those tend to increase the odds of a trade playing out. And what do I mean by that? So on Tesla, what could we see here that kind of suggests that this thing could actually break to the upside if you were to play upside, or if you're still holding some long position? So the first thing is we have an inverse head and shoulders like structure. That is one factor. But we have this left shoulder, we had this head, we had a right shoulder, right? Okay, that makes me think that maybe we're about to get a breakout. How high will we go? Well, we have this previous resistance, excuse me, support becoming resistance, and we have this gap to fill in the 207s for Tesla. So that could be one target. Plus, the top of where this entire structure broke happens to be at 212. So that could be another target if we were to get a full on breakout. Now, we reached 205, so we came just short of getting there. I'm not sure if this thing will end up breaking out of that, so you want to be very careful. So one thing that I oftentimes do is I kind of like look at SPY and see what that could suggest. SPY is showing some weakness, so Tesla needs a catalyst to really break out. So always keep those in the back of your mind. We're already like kind of like predicting what we need in order for Tesla to run out. But because we have an inverse head and shoulders, I'm still eyeing a possibility of this breaking to the upside direction. And then when you kind of like add some indicators and such to this, you can see Tesla's still holding very close to 200. So we're getting buyers to defend this, and we're getting some nice bullish flow. Now we also have a potential flag forming. This could be forming a nice bull flag, and we could see Tesla attempt to break out of this and start pushing back up if we get a breakout. So with the bull flag forming, with the trend being bullish, as Tesla's been making right higher highs, higher highs, and a higher low should be established before it tries to bounce. With the inverse head and shoulders, these are all suggesting that upside is more likely for Tesla. Now, can I promise that? The only issue is with SPY, we don't always know because SPY and the QQQ are showing some weakness right now, and Tesla really has to outperform them to really get that move. So we need some kind of news catalyst or something to get this to break out. But what could you guys take away from this? And this is what's very important. When you are day trading, you want to time your entries right, but what I typically do is I tend to look for confluences. I tend to look at what indicators are kind of like developing and telling us that Tesla could go up or down, and I want to find multiple ones that are telling the same thing. So in this case, I give you guys three different things which suggest that Tesla could push higher from the market structure. That's the first one. This breakout from this consolidation that you could even argue that's like a second one for more upside. This imbalance, that's like a third one. This chop zone, that's like another one that's worth noting. The inverse head and shoulders is a fourth one. The bull flag, that's like a fifth one. There are a bunch of different things that suggest the algorithm could try to get Tesla to fill this gap. The gap, I mean, technically the gap is like another target that does help. So a lot of things do suggest Tesla was going to get the breakout. We did call this out anyways, and much of the move is already like done, but there is still potential for it to try to go higher. But just know that even though we have these confluences, Another thing about trading that's so difficult is there are always those like ifs and buts. So this could break out, yes, but there's always an exception. What if the whole market gets bad news? What if there's a new pandemic? Anything could happen, so always be prepared for every single trade you make to fail. Every trade you make could end up failing, and that's why you want to utilize risk management and stop losses and such. So I can't promise you Tesla's going to run up. I'm not saying I'm 100% sure it will ever, right? I'm never that confident. But what I can tell you is that there's an extremely high probability the stock is going to go up looking at the different confluences of indicators. All right. And that's what you want to be looking out for when you're trying to make your trades. Okay. Do we have five different things saying it might go up? Are there 10 indicators that say the stock is going to drop? Look out for those when you are making trades on your SPY charts, on your QQQ charts. If you're trading ES or futures, look out for those. That's the first lesson I want to like remind you guys about. And then the second lesson is kind of like the psychological aspect of trading. So when you do make your entries and such, and this kind of relates to my previous video, I briefly mentioned this, and that is FOMO and your emotions are things that could work against you. So you want to be very careful. When you FOMO into a move, well, first off, you don't want to FOMO. You don't want to just start jumping in for no reason. You want to discipline yourself to look for very good entries and try to catch as much of a move as you can based off where you target the price to go. So when you have a price target, you want to target first before you enter a trade. Where do I think it's going to go? And then that's the reason why you don't want to just FOMO for no reason. And then when the time comes, you want to take profits. Don't become too greedy. Take profits. So in order for you to kind of like follow all these rules, because it's very easy to watch the chart get emotional and forget about your rules. I would say that you need to fix your life. And to do so, discipline is what is key to do it. What do I mean by that? Well, what's a simple example? I'm not going to be drinking at 4 o'clock in the morning on a Monday when I know I have to trade the next day. So I discipline myself to limit what I put into my systems, clear my mind, stay healthy, and identify anything I'm doing wrong. So that's just like one example. Another example is when I have red days, I always try to like look back at them, study what I did wrong, measure it, and then kind of like start from the beginning and understand what caused me to lose money. Did I become too emotional when this move was made? What on earth was the mistake I made? And then what I typically do is I like to go for swims on the days I'm red. It just really helps me clear my mind. I also like to like walk around large bodies of water, whether it's like an ocean or around a park. Those are some things I like to do, and I've mentioned that in another video before because it's very important to find something that is like something that could help you become disciplined and kind of like clear your mind. And that's what I mean by trying to fix your life. That is the key to this game. Trading is not easy. And if you're in a very bad state of mind or if something happens to you, you have to be very careful because the one big mistake could blow your entire portfolio. It happened to me in the past many times. So you need discipline. Have to understand that trading rules are important to follow. I write them down and remind myself every day. Limit your exposure to making very emotional, uh, you know, vacuous decisions. And then don't forget, guys, when you are trading, always be prepared for every trade to fail, and then always look at those confluences. Those are very, very key when it comes to the way that you're entering trades. You're not always going to get them, but oftentimes it could be very beneficial and very helpful. All right, so that is it for this video. I wanted to give you guys just a quick lesson, something that could like benefit you at least again for the weekend. And I just want the best for everyone out there. So I hope hopefully this video was very helpful. I want the best for people. I want you guys to learn a lot, and I just want to provide as much value as I can provide. As you know, I've learned a lot along the way. I also learned a lot from others, and I always want to admit that I am not a perfect person. I make mistakes too, but there are a lot of things I may have learned before you have, and there are things people have learned before I have. So it's always important to be open minded to the fact that there's almost always something you could learn from someone else, no matter who that person is. And when you have this mindset, this growth mindset of always trying to improve and always trying to learn, the possibilities are endless. Okay. You can meet a random person in a coffee shop. You can meet a person that is, for example, homeless, just for example, right? And my heart goes out to anyone that's in a situation like that. But oftentimes you might not think highly of that person, right? It's the truth. I'm going to be honest with you. But that does not mean that you can't learn from them. You can't value them. There's so much to learn from anyone. There's knowledge everywhere. Never forget that. Remain humble, remain disciplined, and never ever give up on what you believe is right work. All right. So I hope you guys could take a lot of this into your heart. I hope this video gave you guys a lot of value. So take care. Enjoy the rest of your Saturday, and I'll see you guys very soon on the next one. Thank you for listening. Have a great day, and peace out.